Thanks very much, Tim. Good to be here with you all today. We've been on the ASX boards for over 20 years. We're unashamedly an oil and gas explorer, but we have a very exciting transition in front of us right at the moment. If I could jump ahead a couple of slides, please. What we have on the plates at the moment is a great team, and that team is what has been responsible for bringing us to where we are today, now at this point in the world where we're going to transition from being an explorer to being a producer. We hope next year, and at a time when energy prices around the world are very favourable, and in my opinion, unlikely to get any better in the near future. So we've got a good combination of skills, from operational to finance to oil and gas, all with tier one oil companies, investment banks around the world. And we've got plenty of cash in the tin. And that's the other good side of it. Everything that we now need to do, we've got good partners, we've got good cash. We don't need anything from the market here to deliver on the promise that we have been putting forward for the last couple of years. Ahead, please. What we have at the moment, the two principal project lines to look at for next year. What we're doing firstly in Cuba, which is a jurisdiction that's unfamiliar to many people in this part of the world, is that it's important to recognize that Cuba is part of the Gulf of Mexico, one of the world's great hydrocarbon zones. And we have been in there for 5 years. We've got a very large block. We have just completed drilling our first 2 exploration wells in just last month. What we have found this year, as I'll talk to in a moment, has been substantial discoveries onshore of oil. But we'll move into appraising that very shortly. But in addition, coming up next year, we have a very large interest in a very exciting well being drilled offshore Australia. That if that comes in, it is going to be also very remunerative for our shareholders. Forward, please. The first well that we drilled earlier this year, that ended up finding 3 independent reservoirs of movable oil in the one well, stacked vertically. The combined column of oil that we found was net almost 300 meters of oil. These sort of extents of discovery onshore are rare, and if I take you through to the next page, it'll probably start to put it in perspective of what those numbers mean. We took that discovery, we gave it to independent experts who have been operating in Cuba for a long time for other companies, a Canadian group, and what they have established for us is an estimate of a 6 billion barrel oil in place estimate, of which they think we're going to be able to recover about 267 million barrels, best estimate. That makes it one of the world's great oil discoveries, onshore particularly, in the last decade. We have that under our belt. We're the operator. We are running this drilling program. Our partner is the National Oil Company of Angola, Africa's 2nd largest oil producer. So they've been paying 85% of the bills for this exploration program. We paid 15%. And as operator, we were able to control costs and keep the pace of the program running. And next slide. And if I look at what we're about to do, we're preparing now to start the appraisal program. Having explored and found so much oil, what we now do is appraise it to determine the flow qualities, the reservoir characteristics, the quality of the oil. And we have 2 wells permitted and approved and funded to take place starting in Q1 of next year. Those 2 wells will, if the appraisal program is successful, be put onto immediate production. We're already geared up with tanks and trucking to allow that oil to go to market. So we're not talking a multi-year, how do I take a good discovery with good production characteristics into commerciality? This is all ready to go. And we're on an island. So it's not like Australia, we have to build a 500-kilometre pipeline to take a discovery to market sometimes. We're 50 kilometres from a deep water oil terminal. an oil battery, and a lot of oil field infrastructure, because Cuba produces about 50,000 barrels a day of oil around us. So there's a lot of existing infrastructure in the country already. So these two wells will take place starting early next year. And this has been the end of a long road for our shareholders. And when we made that discovery last year, early last year in that first well, our share price was 4 times what it is now. And with the headwinds of the world and the delays of getting back to appraising it, and the inflation scares in the market, our share price, like all junior explorers, has taken a battering. But I would take the opportunity to remind people listening, this is a hotly demanded commodity in the world today. There aren't endless new supplies that are coming on stream because it's very, very difficult to fight the ESG headwinds around the world in developed countries, particularly in getting new supply online and getting it online quickly. So to have a major discovery under your belt on an island, close to infrastructure, with the company and its partners well funded for an appraisal program that can bring oil on very soon, makes this an incredibly exciting opportunity, which we've already seen the potential of, given our share price over the last 6 months. Next slide, please. In addition, our job has been to find and advance good exploration opportunities that we have then gone and found international partners to help us fund the drilling of. We've been very good at this over the years. And then one such opportunity that's coming into focus next year is a large carbonate buildup offshore Northern Australia, shallow water, quite close to Darwin. These carbonate buildups are a new play type for Australia, but when they've been tried elsewhere in the world and when they've worked, they tend to work very big. And that's why this is such an exciting play. We were successful in getting a Houston-based oil company, a $60 billion Fortune 500 oil company, interested enough in this project to buy it off us late last year. So they're making a country entry into Australia to drill this one well because they know, like we know, when these things work, they work big. And the independent assessment here is that this could have up to 1.4 billion barrels of oil or equivalent right on Australia's Northern Shore doorstep. So good jurisdiction, good fiscal terms, very sizable prize for a company of that size. They paid us $7.5 million US cash up front to take the license. We have an ongoing interest in their success. They'll pay us more cash, another $5 million, subject to certain terms. But the real prize for us is that they are successful and start producing from this field. They will pay us $10 million US for every 25 million barrels produced. And as I said, it could be up to 1.4 billion barrels, we think. And we don't have to pay another cent. We just sit back now, let this big oil company do what it's going to do. And if it comes in, we just sit there and we'll gratefully receive checks. So this, with Cuba happening next year, for a company of our size and our cash position, we have de-risked the portfolio to an extent at a time of great demand for energy. It's a very exciting runway ahead. Next slide, please. Thank you very much for your time. I probably got through that nice and quickly to leave a few times for questions, Tim.
You did. Thank you, Andrew. You've got a big retail following from what I can remember. Have you attracted any institutional attention?
Yep, we got some instos on the register when we did a raising back in March of this year, but it's less than 5% of our register at the moment.
Yeah, it looks like as you said, there's an incredible footprint and story here. I'm surprised it hasn't attracted institutional support. That said, you've got some operating partners. Can you talk a little bit about what the deal is with your funding partner in Cuba moving forward? You mentioned 6 billion barrels. I think that's correct. Moving forward, how does that work in terms of profitability and profit share?
Well, the agreement we have with them is that we're 30% of the license, they're 70% of the license. For the first 2 wells, there was a different deal. But going forward, we are on what's called a heads-up basis. We pay 30% of the bills, they pay 70% of the bills, and that's the same percentage split on the production and the benefits that will accrue from producing oil.
And can you talk us through kind of your timeline to production? How long is this going to take?
We could, here we are in late November. I've got my team working hard. We've just released the rig from the end of the exploration program. It's going through maintenance and recertification, blowout preventers and key components, safety testing, doing a bit of civil works. Short answer is I hope to have the rig back and spinning in February of the new year. And the first well is very shallow. It's only 1,800 meters, and we just drilled it. So we know what we're drilling into. It'll be quick, a month quick. And when the oil starts flowing there, we'll let it flow. And the Cubans are very keen to have oil. So if the appraisal is successful, if the flow rate is good, and for those who haven't been following our story, when we drilled that well last year, that flow came at us under pressure. It was very exciting. So let's see how it performs. Let's start putting it out into tanks and start exporting it.
And you spoke about the infrastructure, the existing infrastructure there, and an existing industry, oil industry in Cuba. What's the kind of political environment like for an outsider, so to speak?
Well, Cuba's implemented foreign investment laws back in 2014 that have encouraged foreign investment, and it's been a very good place to operate. My background, I had a long time with Credit Suisse, doing emerging market resource projects all over the world. So I have had some skinned elbows in my time in some jurisdictions around the world, and this one doesn't give me the heebie-jeebies at all. They're a very, very professional, well-educated, competent regulator and political environment. They're very keen for the foreign investment. They have a lot of headwinds for their economy because of the amount of money they make from tourism, and the COVID stopped the tourists coming. They're needing to import oil to make up the deficiency in their own production. And because of the historical relationship with the US and the people who do come in and who do operate there are treated with golden gloves. So I find the jurisdiction very effective and very able to be worked in.
And the strategy here is, excuse me, is for your Australian assets to kind of produce cash flow to help you in Cuba. Is that how it works? And if you...
Yeah, no, fair comment, but no, I don't need one to subsidise the other. They're both, Australia's an exploration opportunity we don't have to write another check for. The Americans are writing that check, and if they're successful, we'll sit there and take the payments they are going to give to us. So that's tremendous. Cuba is, we have our funding already sufficient for Cuba to do these appraisal wells. And if they're going to be successful, these appraisal wells, which are a very good confidence in the performance we've seen in the oil already, but they will be, then that will be a revenue stream for Cuba. And we'll keep the two things separate and run two different businesses, Australia and Cuba.
And I mean, ultimately, if you get to this very successful stage, you're going to attract the attention of big oil at some point, aren't you?
At this size of a discovery, exactly right. Well, we've got, as I said, a major national oil company as our partner already. The 6 billion barrel find that we've made, how much of that is economically recoverable? The independent expert said maybe 400 million barrels of that. I'd be delighted at 400 million barrels. And so with our partner, that's a globally significant resource to have found onshore. But there's good reasons it could be more.
And so that equation, when do you find out, or when do you get to a stage where you can work those numbers harder, be more accurate on the scale of 400 million to 6 billion?
You're going to know starting first quarter next year, and maybe by the second quarter we've then given you even more confidence because we've run the flow tests for a period of time. And as you watch declines in how the oil produces from the reservoir, and you then shut it in and let the pressure build back up, and then watch what the profile is again, you can take that last piece of data and marry it with all of the volumetrics that the independent experts have done to say, you know what, the 400 million barrel looks like being plus or minus X. And that's when you have confidence in the number.
Andrew, thanks for your time. Good luck out there. Good luck first quarter next year. We'll follow with interest.
Thanks for your time, Tim.